in the last hour of the market today, January 5th, 3:09 p.m., we detected 11,340 unusual options on ZipRecruiter, ticker symbol ZIP. What could this mean for the stock? In this video, we will briefly review this unusual option activity as usual. So, if you're not familiar, ZipRecruiter is in the marketplace for job seekers and employers. You can see from the chart, we bottomed on October 25th, and ever since then, it's been on an uptrend. So will ZipRecruiter zip up from here? Let's take a deeper look at what these unusual options mean. So when we take a look at the chain, because these expired June 21, you can see this is 168 days away. You can see here the 17.5 strike calls and the 22.5 strike calls. 11,000 volume, 11,000 volume. Both opening trades, since the open interest is much less. And you can see we are also in this position as well. We are using our position sizing because this trade does not meet our threshold for a high probability of profit trade. You can see here, we believe they were buying the 17.5 strike calls for $66, which is the price right here. And they sold the 22.5 for 20. So we subtracted by 20. So each of their trades cost $46 each. And since they did 11,340, we want to multiply by 11,340. You can see that this is $521,000. Okay, $500,000. It is still unusual, even though it did not meet our $1 million trade threshold for higher probability of profit trades. Okay, so we simply followed this trade. As we said and calculated, it was $46. So this is what their trade looks like. This is a vertical call spread. Okay, so you can see here that it does have a max profit because they did sell a call. Okay, they bought and sold a call here. Okay, but the risk to reward ratio here, you can see they're risking $46 per trade, potentially able to make $454, so nearly 10 times. Okay, that's a 1 to 10 risk to reward ratio, positive 20 delta. And so we like this risk to reward ratio. However, the probability of profit is not as high because you can see that ZipRecruiter stock needs to break even at about $18 here at expiration for this stock to be profitable. And $18 is all the way up here. So the stock would have to move about 30% by June. All right, so definitely has to zip up there as soon as possible. Because if it does, it actually, if we look here, the purple line, if it actually zips up fast, it's going to be profitable. It does not actually have to meet the break even of $18. This break even slowly moves towards this because of the theta decay that we have on this trade here. Okay, it's a negative 0.24. And so eventually it does hit 18. So if the stock moves much quicker you could potentially start making profits in the hundreds of percentages, all right? Because you can see that if we were to, for example, zip up to just $15.74, that's a profit of $46 there, which is 100%, right? And it hasn't even made $18 yet, right? So depending on how quickly this stock moves up will determine how much profit and how quickly we can profit from this. So the speed at which it zips up really matters when you trade vertical call spreads. All right, so if you are interested in this type of analysis and the stock picks that we find with unusual options activity in the millions, not like this one, but in the millions where they're deemed higher probability of profit, go to our website. All right, we'll put a link at the top here. Find out how you can gain access to this and comment below what you think will happen to ZipRecruiter. Will it zip up or just stumble around and be a complete loss? What do you think? Please smash the like button.